Want to start investing in stocks but have no idea where to begin? Don't worry. You don't need thousands of dollars, you don't need to be a Wall Street expert, and you definitely don't need to stare at stock charts all day. In this video, I'll show you a simple way beginners can start investing in the US stock market in 2026. First, set your investing goal. Ask yourself, why am I investing? Is it for retirement, building long-term wealth, buying a home, or simply growing your savings? Your time horizon matters. If you need your money in the next few months, stocks can be risky because prices can move up and down quickly. But if you're investing for many years, you have more time to handle short-term market fluctuations. Next, you'll need a brokerage account. In the US, brokerage platforms allow you to buy investments like stocks and ETFs. Before choosing one, compare fees, account minimums, available investments, and other features. And remember, never invest money you can't afford to lose. Now, here's one of the biggest mistakes beginners make. They find one exciting stock online, put all their money into it, and hope it skyrockets. That's extremely risky. Instead, many beginners start with diversified ETFs or index funds. For example, an S&P 500 index fund can give you exposure to hundreds of major US companies through a single investment. That means your entire portfolio isn't depending on just one company. And diversification can help reduce the risk of being heavily exposed to one investment. Next comes one of the most important habits: invest consistently. Instead of constantly trying to predict the perfect time to buy, you could invest a fixed amount regularly. For example, let's say you invest $100 every month. Some months the market will be up, other months it could be down. But by investing consistently, you're building a long-term habit instead of constantly trying to predict the market. And remember, past performance does not guarantee future results. Most importantly, think long-term. The stock market isn't a get-rich-quick machine. Your portfolio will go up sometimes, and it will go down sometimes. The key is having a strategy, staying diversified, controlling unnecessary costs, and giving your investments time. And here's the biggest mistake you should avoid: chasing the hottest stock. Don't invest just because someone on TikTok, YouTube, or Reddit says this stock is going to the moon. Do your own research, understand what you're buying, and make decisions based on your own financial goals. So if you're starting from zero, remember these 4 things: set a goal, start diversified, invest consistently, and think long-term. Your first investment doesn't have to be huge. It just has to be a smart beginning. If you want more simple US investing videos, subscribe now. And remember, this content is for educational purposes only, not financial advice. Investing involves risk, including the possible loss of your money.